In the first half of 2025, Palantir posted its first ever billion-dollar quarter, a staggering 48% year-over-year growth. But besides selling high-end analytics platforms to the US military, Palantir's tech helped run 53 driverless trains, rebuild COVID vaccine supply chains, optimize Airbus's A350 production, and even manage analytics for hospital operations. Now, obviously, Palantir does much more than just sell software to the government. But is any of that actually profitable? Let's take a look at how Palantir makes money. On May 6, 2003, the billionaire businessman Peter Thiel, fresh off of the success of PayPal, saw a huge opportunity in the national security space. This is right in the aftermath of 9/11, and the CIA had just closed its Total Information Awareness program. So the timing could have never been better. Thiel's plans were for Palantir to be a, quote, mission-oriented company. He had the idea that he could apply similar software that he had to PayPal's fraud recognition system to, quote, reduce terrorism while preserving civil liberties. Thiel had little interest from investors for the project. So instead of initially raising money, Thiel bankrolled the prototype himself, starting small with one of his PayPal engineers, Nathan Gettings, and 2 Stanford students, Joe Lonsdale and Stephen Cohen. Thiel would also go on to hire Alex Karp as the company's CEO. Despite being branded a spy tool, government agencies around the US and Europe lined up to use it, and Palantir landed contracts worth hundreds of millions within its first few years. By late 2013, despite being a private firm, Palantir had exploded in value, hitting a staggering $9 billion valuation. Palantir pioneered a new kind of corporation, one that ignores consumers entirely, focusing instead on building mission-critical platforms for governments and Fortune 500 giants. Palantir doesn't generate the raw information. It outsources that to satellites, hospitals, and armies of sensors so that they can focus entirely on making sense of that data. Looking at their 2025 quarterly revenue, that pays off. Palantir can charge much higher prices than competitors. Its enterprise deals often range in the millions, reflecting a price premium built on unmatched depth and customization. Palantir doesn't just sell software, it sells contracts worth hundreds of millions. For example, while its Army deal costs little more than engineers and server time to run, Palantir charged nearly $500 million. And that's why the company runs at a whopping 80% gross margins, a markup higher than any defense contractor in the world. That means clients are effectively paying over $8 million per customer each year, well over 100 times what it likely costs Palantir to host, maintain, and support the software. To create a market for their product, Palantir first focused on government and enterprise decision makers whose endorsements could open doors. Trainers and engineers traveled to agencies and corporate sites, showcasing the platform in action from intelligence operations to supply chain optimization. This allows clients to feel empowered and in control, using platforms that touch mission-critical operations, from intelligence analysis to supply chain logistics. They don't just sell software or wait for use cases to emerge. They create their own success stories and produce the data-driven analysis that demonstrate measurable outcomes. That means Palantir retains control over the methodologies, insights, and the narrative of its software success. With modern media and reporting, this results in word of mouth, credibility, and reputation effects that dramatically amplify the perceived value of the platform and justify premium pricing. The ultimate example of Palantir's story performing wasn't a flashy consumer stunt, but rather its role in supporting the US military during their war in Afghanistan. Palantir deployed its platform directly into combat zones, helping analysts and soldiers identify roadside bombs and insurgent networks. The company spent hundreds of millions developing this capability, but the value it generated was staggering. Military officials estimated that the software prevented countless casualties and saved billions in defense costs. So in Palantir's world, that was probably worth it. Both securing billion-dollar government contracts like these and selling products with an edge enables Palantir to remain one of the most dominant firms in the data analytics category. In 2023, Palantir generated $2.23 billion in revenue, cementing its position as a leading player in artificial intelligence and defense software. To reach that much revenue, Palantir spends heavily on sales, lobbying, and long-term government relationships. In some years, more than half of the revenue has gone into sales and marketing efforts. The company is still almost dependent entirely on its core products, its data platforms like Foundry and Gotham. Back in 2020, revenue skyrocketed to nearly 47% year over year. By 2021, it had grown 41%, then slowed to 24% in 2022, and a modest 17% in 2023. Its 2024 rebound to 29% was a good sign, but the slowdown raises a red flag. Meanwhile, government contracts still dominate, accounting to around 55% of sales in 2024, amounting to roughly $1.57 billion. That kind of concentration can become a vulnerability if budgets shift or contracts lapse. One example of how Palantir's strategies plays out is in its partnerships with government agencies. By working across multiple branches, from defense to intelligence to law enforcement, Palantir creates a kind of synergy. Data collected and insights generated in one area can also be adapted and applied to another, making the platform stickier with every new contract. In practice, this means that a solution developed for counterterrorism may later be repurposed for fraud detection or cybersecurity, multiplying the value of the same underlying technology. The commercial expansion is also a good example of how Palantir's platform approach can generate value across multiple industries and contracts. Palantir initially secured a government contract worth $44 million in 2010 for counterterrorism analytics. Since then, that single engagement has expanded into a multi-year relationship across dozens of agencies, now valued at over $1 billion in recurring revenue potential. So Palantir was able to multiply the value of its initial deployment more than 20-fold. And with demand for AI-driven analytics rising across both governmental and commercial sectors, the potential value of Palantir's platform deployments is likely to skyrocket even further in the coming years. Nevertheless, the overwhelming driver to this day remains Palantir's core platform contracts, which account for roughly 90 to 95% of total earnings. The company frames its newer initiatives like commercial AI deployments and AIP as long-term investments, signaling that these are currently not significant revenue streams. In other words, while they may pay off in the future, right now they represent strategic spending rather than immediate profit. If you like this video, make sure to like and subscribe, and remember, Jesus loves you.